Before we get to the nitty-gritty that I'm sure Joe wants to talk about, and the hot chicken that I'm sure Joe wants to talk about. Let's just talk about the drop that we saw in Bitcoin today. It did drop below that 8,000 level. I know these big round numbers sort of, grab a lot of attention. But what was the explanation? Was there an explanation?
Yeah, there's a couple things here. The first, and I always say this, we're in a nascent market. There's going to be big moves, a lot of volatility in these early stages. But if we look at what was unique or interesting about this run over the last 5 days going down, a few things stand out. The first is that almost all of the volume came from derivatives exchanges, not spot exchanges. So derivatives exchanges were doing an order of magnitude or more volume than the spot exchanges. This points to the idea that it was not retail selling. It was larger investors selling that are sophisticated, going to use derivatives exchanges instead of spot exchanges. And the second thing that you'll start to notice there, well, I don't know that it's good or bad. It just points to the fact that these are larger sellers that are going in and dumping into the market, not smaller sellers. There's a lot of data points here that are interesting. The December futures went from a 3% contango, so pricing at a 3% premium to the spot market, down to 2% backwardation, so at a 2% discount to the spot market. So again, these are people selling futures instruments. So the run was being caused by these larger institutional, or at least large holder sell-offs rather than retail selling into the market. That's interesting. That points to a larger set of people making moves.
It's interesting too, because I think when Bitcoin actually peaked in December 2017, it basically peaked to the day that the first true futures launched. And this was the week of the backed, the ICE exchange, the first sort of physical Bitcoin deliverable futures, which is kind of a weird contradiction. Nonetheless, so it's kind of notable that we get these sort of intense turning points right at the times when supposedly a new vehicle ends up for money to come into the market.
Yeah, that's right. I think the backed launch certainly contributes to the narrative here. I'm not sure how much it contributes to the actual practicality of the situation. Their volumes increased over the course of the week, but it's still very small compared to what's trading on the other exchanges. It certainly affects the narrative, though, and I think that's interesting. What backed signals to me, more importantly, though, is the increase in comfort of institutions entering the space. Backed, launching this physically delivered, and like you said, maybe a little bit of a contradiction in terms, physically delivered Bitcoin future is interesting. It should get more institutions comfortable with it. We'll start to see that kind of octopus of the financial industry reach its tentacles in more into the space, and I think backed is a big indicator of that.
So as these larger investors, though, get more comfortable with it, why haven't we seen the SEC get more comfortable with it? It seems like we've been waiting for quite some time for them to sort of embrace this.
I'm glad you used the word waiting, because there's a lot of kind of fear about all this bad stuff that the U.S. government has done. That's not really true. There hasn't been a cannonade and assault on the space. It's really just a waiting game in a lot of gray areas. I was in D.C. earlier this week talking to regulators and legislators, and what I found was that it's just this game of patience. They want to make sure that they really understand the space before doing anything, and there's so much ambiguity at this point that it's challenging. And on top of that, the markets are not orderly. It's hard to tell who the good players are, and so it's tough to regulate a market like that.
Now, Bitcoin fell a lot this week, but a lot of the other coins, there's a euphemism that I can't say on air for them, did much worse. Is there still just too much garbage in this space for it to be taken seriously? There's just stuff that's still too frothy, too many projects that just need to go so that people can focus on what actually matters.
There's a lot of garbage in the space, but I think what needs to happen there, I don't think the garbage will disappear by itself. What needs to happen is other good assets in the space need to develop their own narratives and their own usage and have the signal outperform the noise. I don't think the noise will disappear by itself. You need to have more use cases, more adoption, and that's what will drive the attention towards the good projects.
And we still don't see, it's really rare to see anything not just rising and falling with the market. This still isn't a market where good coins go up and bad coins go down on some days. It's basically everything tends to move in the same direction.
I think that's right. Really, the biggest example we do have is that Bitcoin is increasingly uncorrelated with the rest of the market, but all the other assets tend to move pretty much in tandem with each other, absent for kind of freak events that affect a single asset in a significant way.
Does it still sort of serve a purpose, though, as, I guess, a haven asset? I mean, we saw that sort of behave that way earlier in the year. It didn't necessarily behave that way over the recent bout of market volatility that we had.
I think that's a fair point to make. I do think that Bitcoin is developing as this sort of safe haven asset, and every new event that's happening that's making people scared about existing asset classes is a boon to it. Whether you talk about the China trade wars, whether you talk about impeachment talks, whether you talk about recent news with Iran, that is all affecting the price of Bitcoin. People are buying into that narrative, and over time, that safe haven argument is going to become stronger and stronger.